Hi, this is Mitch King with the Thursday evening, September 17th, 2009 Daily Stock Report. Dow Jones hit a new high today and pulled back a little bit. It's very conceivable that we have a gentle pullback, very mild, nothing to be too concerned about unless there's some really seriously negative news. That would be the type of action that we could possibly see most likely, and then a higher high with a dip, assuming that we continue with the pattern that we've been having for 6 months and about 14 dips and 14 buy on the dips after that. NASDAQ Composite down just a little bit, 0.3 of 1%. And here's the S&P 500 looking for a really gentle pullback here or even a pause going sideways. But there's still a lot of money on the sidelines that's very likely been sitting there waiting to get in, and they're chomping at the bit because they've missed out on a lot of big bull run. So they might be the last group of people to get in there to prop this up a little bit. You know, we just keep on doing the same thing we've been doing with the same pattern, which is pretty easy to buy on the dips on the long side and look for these really hyped up, overpriced short sales that you've been seeing me give you for this last month or so, and they've been working really well. Here's Pepsi Cola, long position. Just a reminder, this is about a 4% dividend yield, and it's a really slow mover, but gradually moving up. Prudential hit a higher high today, reversed and was down 1%, kind of like representative of what the Dow did. Here's higher high on Google, looking really strong, and Apple also was very strong, going up 1.4% on Apple. We're just hanging on to these longs as long as it goes up. Here's Bank of America starting to take a little move now after a couple weeks of just being flat, up 2% today. And here's Cardinal Health making the analysts look bad, which isn't hard to do. We're just hanging on to Cardinal Health as long as it keeps going up. Had a couple emails on WCRX today. There's a little bit left. It's starting to drop a little bit, and we're not seeing a huge profit potential left on this. This is the second time we've shorted this. First time here was right there, and the second time was somewhere last week or so, and we're looking for some sort of cover point below $19. So we don't have a whole lot left in this one. Here's VVUS, the fat diet drug. I'm really surprised it has sold off so much, but we'll just keep it short as long as it's still acting good. Let's take a look at ATPG. Made a nice start to a correction today. Got as low as 1847, which was down 2 points or almost 10% from that high. It could go either way tomorrow, but the odds are it should start breaking down. If you don't have a position on this, take a look and see if it moves up tomorrow and start entering a short position if it opens up. And if it drops, let it drop first and then let it bounce and then short it on that bounce. And let's take a look at that right now. Here's ATPG, where it pretty much opened where it closed, 20.4, dropped down to as low as like 1860. Actually, it went down a little lower. And then this gave us a nice buy signal to go long on a scalp, which I'm sure some of you did, and that would have been an excellent profit because that was over 5% profit from this 1860 to 1985, a 6.4% profit potential. And this is very likely to see some type of pattern like this tomorrow where it drops really hard. And for you scalpers, this is an excellent idea to, if it drops substantially like that, 10 or 12%, and it'll have some sort of a bounce. So you're trying to get part of this from here to right here. So look for that again tomorrow. Now, if you can find the shares and it drops like this, don't short it until it bounces. It'd be one of the ways I handle that. But long term, the stock should do quite well, coming somewhere down in here, $14, $15. Under 15 was what I'd be looking for on this stock. But there's going to be a lot of good scalping in between while these bull shorts that ramp up like this come down. And here's a little tighter look at this. And here's Clayton Williams, CWEI. It stopped going up today. Just remember, this is a small float and a low volume stock, so don't get heavy in this one because this is for you guys who build these big positions. This could be hard for you to get out with only 107,000 shares traded today, but it still looks like this is conceivable to see some sort of drifting down for a profit. This would not be a good one for you guys who are doing your very first bull short because the float's so small and it's very volatile. But it is in the same category of these independent gas stocks that are really running up, and speculators are really running this up, and this is going to end bad for them. Here's a stock I didn't talk to you about, was GMXR. It's in the same category, independent oil and gas stocks, kind of a companion of the ATPG, CWEI, and I watch these three. There's a handful of these. I watch them to see how they're doing as a group, and as soon as someone starts turning over like we see right here, that's a really good sign for our short position in ATPG or CWEI, because these hedge fund guys and newsletter writers and analysts, I'll try to bring their group in some of these to run it up, and it's called a pump and dump, where they pump it up and then they dump it just before the group of people who bought into it. So I am not one of those guys. I'm trying to help you guys to make some money and not to pump and dump this stuff. As you can see, I'm a heavy short seller on these bull shorts. Here's the MGM, a very small short position. This is going to start heading down, it looks like to me, but it's possible it may not be done enough. This is not quite as good as the ATPG, but note it is optionable for those guys who are going to try to profit from a falling stock. So you guys take care. Put the odds in your favor. We'll talk to you Sunday night.